Walmart has just released their earnings for today and the stock is crashing down 11.4% to $131 a share and 35 cents. If we look at the price for the year, this is the lowest it's been all year, and in fact you have to go back to the start of 2021 when it was $129 a share. So an entire years of gains and then some has been wiped out because of these earnings. So what's happened with Walmart? Well, what we're going to be doing is going through these updated numbers, see why the stock has took a bit of a nosedive, then look at my discounted free cash flow model and Buffett Graham intrinsic value models to see if the stock is a buy. Is this the right time to buy? That is the question I'm going to answer. So let's just talk about the stock price. Well, we already have a little bit, $131 a share, and as said before, it's down 10%. So let's get straight into the numbers. Before that, can you please give a like on the video and subscribe if you're not already, because it really helps me out with the algorithm and all that fun stuff. So we have the 3 months ended 21 and then 22 here. What we're looking at first is revenues, and the net sales are, well, the revenues are split up between net sales and membership and other income. 140 billion, up from 137 for the previous quarter, 1.2 compared to 1.5. So overall, that is 141.5 billion compared to 138. So that is up. Yes, it is up, but only up 2.4%. Now, if we go to Yahoo Finance, these are the revenue numbers for Walmart over the past 4 years. And as you can see here, it's been steadily increasing, yes, but not massively. Gone from 514 billion to 523, 559, 572. And with these updated numbers, 574.7 billion. So yes, it is an increase, but definitely slowing growth, and that is probably why you'll see the share price has dropped. Next, we're going to be looking at earnings per share. Not earnings per share, I don't know why I said that. Net income is because I was looking at the earnings per share. Well, you can see that's decreased, so spoilers ahead. We want to look at Walmart's profit. It went from 2.7 billion down 24% to just over 2 billion. Well, let's have a look at some of the things that massively increased here. You can see cost of sales has increased. Overall, it has gone up 3.5 and 4.5%, which is higher than the revenue costs. Big increase. Debt down 22%. The biggest grosser here is, well, you can see it's been pretty much decreases across the board. That's why we have overall it down. So 2 billion in profit for the quarter. Now, if we go back to Yahoo Finance, what is this saying? Well, Walmart has been pretty good, 6.6, 14.8, 13.5, 13.6, but this gives us a decreasing trailing 12 months of 12.997 billion. So this is the lowest it's been since pre-2020, which is another reason for the share price decreasing. Speaking of shares, we're now going to look at the amount of shares, and Walmart are buying back their shares. They bought back quite aggressively, 2.8 billion to 2.7. About 70 million shares. 70 million shares have been bought back. Why is this good? Because they're rewarding investors. So if there's one share of a company, if you have one share of the company and there are 10 shares, you own 10%. They buy back 5 shares. There's now only 5 shares. You own 20% of that company. You have more of those profits for your shares, and that is why it is good potentially for companies to buy them back, and Walmart are doing that. Finally, we want to look at the free cash flow, and it's cash flow from operations minus capital expenditures, and we have a bit of a sad tale here again. We have the lower net income of 2.1 billion, and everything is up. Inventories up is up about 3 billion. Accounts payable up. Accrued liabilities is up. A lot of things are up, and it actually puts the net cash provided by operating activities to use in operating activities 2.8 billion in the positive to 3.7 in the red. Now, when we take capital expenditures away, which is the free cash flow, cash from operations minus capex, you can see capex is up 2.2 billion to 3.5. So overall, that gives a free cash flow of minus 7.3 billion. So Walmart do actually talk about this a little bit lower here. This is the number that we see here. Positive 664 million for the quarter, now down to 7.2. Well, what are they talking about? They were talking about inventory costs and purchase to support strong sales and low operating income in the time of certain payments. This is the lowest free cash flow that they have seen in quite a while. If we go back to Yahoo Finance, you can see that we've had very, very good free cash flow in Walmart. 17.4, 14.5, 25.8, 11 billion, and now down to minus 7.3 billion. So this jumps it over very nicely to our discounted free cash flow model. Calculate the future free cash flows based on averages of Walmart. This with the averages are expecting very slow growth. 13.1, 13.5, 14.1, and 14.6. Well, what does this give us as a fair value? $135, which means it's about fairly valued as it is right now, 3.32% discount. What we're going to do is quickly just jump to the Buffett Graham intrinsic value. Then we're going to talk about both the numbers in a little bit more detail. This is earnings per share and expected growth rate. Analysts are expecting growth of about 9.5% over the next 5 years. And that is the most up-to-date earnings per share. Well, what does that give us? Slightly overvalued, $129 a share, which means it's at a 1% discount. So the models currently are saying that Walmart is not a buy, and it is in fact fairly valued. So this dip was a good thing. But one thing I want to draw attention to is 2022 is a bit of a blip. If we were to take the averages, ignoring 2022, now yes, it is quite a big year and quite a big difference. But I just want to see if Walmart had good profits and good revenues again, what the stock could be at, and that's about 4.33. And here, well, this is actually about the same. It would be a $200 stock, 57% undervalued. And if we go back, well, was Walmart a $200 stock? Not quite, but it was at highs of about 160 here just before in April. So yes, it could grow to that if the company was still growing quite happily there, or quite successfully. But that is not the case. It is have declining free cash flow, and as you can see from these numbers, revenue is slowing. Analysts are still expecting 4% over those next 2 years, but Walmart itself has said that the growth will be slowing as well. So is this a turning point for the stock? Yes, fairly valued at the minute, does pay a nice dividend, but this does not look like the right time or the right time to buy a dip. I would have thought that the discounted free cash flow and Buffett Graham intrinsic value would have really liked this stock, but it almost has the price bang on right now. So once again, $131 a share, that is pretty much what it's asking. If we compare it over the last 5 years, it has been a pretty good grower if we do compare to the S&P 500. In fact, about the same, 66%, and obviously this does not include reinvested dividends. So the last 5 years, pretty neck and neck, and this is after Walmart's drop. So the company was beating the market over the last year. Once again, it would have been a similar story, yes, but it dropped off massively. And if you just go to the all-time, if you invested in Walmart back in the beginning, you would have been easily beat the market, but everyone had that kind of foresight. Right, guys, thanks for watching. Please give a like if you enjoyed the video. Comment on your thoughts on Walmart down below. Is this a buying opportunity to you, or do you agree with the model? And subscribe if not already. So I'll catch you guys next time.